What's up, guys? I've traded Forex for over 10 years, both manually and with robots. And today I'm breaking down the ultimate battle between human versus automated tools, or human versus robot. Which one actually makes more money? The answer may shock you because the winner isn't always what you think. So make sure you stick to the end of this video to be able to get the answer to this thing. Okay, let's get into the video. The first thing we have to define is what is a robot or what is an expert advisor. So an expert advisor is just an automated tool where you as a human code a strategy behind that tool and it automates that process for you, or it trades for you 24/7. So before we even go into a video, any idiot can just create one robot and think it's going to be profitable. Any fool can just create any automated tool and think it's going to be profitable. You need to be profitable as a human yourself before you can create a robot. That's why many people who have tried to use ChatGPT or tried to use DeepSeek or this to create automated tools end up not succeeding, because a tool will only be able to work, an automated tool or a robot will only be able to work if you as a human who created that robot is already profitable yourself. If you are relying on AI to create a tool for you, relying on other softwares to create, it's not going to work. So you need to be profitable as a human before you can even create a tool that is also going to be profitable. So I just wanted to take that out of the way. So that's, in a nutshell, that's what they call an EA. They can also call it an EA, which is an expert advisor. They can also call it an algo, which is it trades algorithms for you. You can also call it a bot. All right, and a typical example of that is, you guys must have heard about Pitfalls Pro. So Pitfalls Pro is an AI-powered Forex robot, which you can also call it a Forex EA, a Forex algo, or a Forex bot. So I wanted to explain or define what is a Forex EA to you guys so that you can better understand. All right. When it comes to automations, or when it comes to robot, or when it comes to algos or EAs, there are no emotions. A robot doesn't care. That's the reason why a monkey can be a better trader than you, because that monkey doesn't care about that money he's trading. If that monkey was actually risking his bananas, trust me, that monkey wouldn't be profitable. So the reason why that monkey is going to be more profitable than you, watch me, is because that monkey doesn't have any emotions attached to that particular trading. That monkey doesn't have any monetary value attached. That monkey is trading with zero emotions. One thing that kills Forex traders is because they trade emotionally. It's because they have monetary values attached to those trades they are taking. So that's one thing I've noticed that's going to kill you as a trader. So when it comes to automations, there are no emotions. That robot doesn't care about that money involved. The robot is just following the algorithm behind that particular robot. The robot is just following the system or the coding or the strategy you've coded behind that particular robot, and doesn't care about any algo, or doesn't care about any emotions, or where you took that money to invest in that particular account. The robot is going to follow logic, all right? A robot will follow a particular logic without second guessing, without changing the plan. That sometimes you might want to trade, and when you see a setup, you start second guessing. That robot won't second guess. A robot is going to trade 24/7. A robot doesn't get tired. You as a human, you have your limit, you can go. You have the number of hours you can sit on your screen looking for setups to trade. But the robot doesn't get tired, doesn't go through fatigue. A robot is going to operate 24/7. So that's the definition of what they call a Forex algo, or a Forex bot, or a Forex EA. Let's go. Remember, we're putting side by side human versus AI, human versus robot, human versus EA. All right. So let's talk about human. What is human trading? Obviously, if I'm sitting here, this is 10 years of trading the Forex market. In those 10 years, I've traded manually, and I've only had a portion of my portfolio invested in algorithmic trading. So manual trading is simple, where when you as a human, you actually open your MetaTrader 5, you do a trading view, you do the analysis, you look for your setups, you look for your support and resistance. If you are using indicators, maybe you put your moving averages, your Fibonacci tools. If you're looking for all of those strategies, I already have them on this page. So this video, we are not talking about strategies. So that's manual trading, where you actually have to do the work yourself without relying on any automation or relying on any automated tools. So Manual trading relies on experience. All right, it relies 100% on experience. If you are planning to do it on your own, you need experience to be able to succeed. You need time to be able to allow yourself to master that particular skill. That's why I'm saying manual trading relies on experience, intuition, and pattern recognition. Remember, you don't have any assistant. That's why sometimes they call a robot a trade assistant, because that robot is going to help you to recognize those patterns. That robot is going to help you to avoid to avoid second guessing. But now you're doing it as a human, so you need to be able to, number one, have the experience. Number two, be able to recognize patterns. That's very, very important. And as a human, you need to be able to adapt to news. You need to be able to adapt to news and market conditions, because that's going to happen no matter the asset you're trading. We're obviously going to have fundamentals. So how can you incorporate fundamentals or news in your trading if you are to do it as a human? Let's talk about the pros and cons when it comes to trading with a robot or trading as a human, so that you can better make a decision. Remember, I always strive for a balance, for you to have a portion of your portfolio invested in a robotic trade. But let's talk about the pros and the cons. Let's start with the human. Like I said earlier, no idiot can just say, I'm going to use ChatGPT or DeepSeek and create a robot and it's going to be profitable. No, you have to be profitable as an individual before you can code that strategy that is profitable behind a robot and expect that robot to be profitable. That's how it works. So pros of trading as a human without the robot sometimes is adaptive to unexpected news events. As a human, if I know that, okay, today is maybe Friday and there's NFP or Donald Trump is going to be making a speech, or the FOMC, I'll be able to adapt. Maybe I'll stop trading throughout that particular period, or maybe I'll reduce my exposure or my risks. I'll be able to adapt to unexpected news event, expected and unexpected news event. Number two, emotional intelligence, if trained. Keyword here is if trained. So if you are trained as a human, that emotional intelligence you have is something a robot doesn't have. It's robot and AI can have. Then you can feel the market structure. As a human, you can feel the market structure. You can actually open your chart sometimes. That's why the only book I've ever recommend for you to read is Trading in a Zone by Mark Douglas. That book doesn't have any strategy. That book doesn't have any methodology. But it's going to train your mind to think and act as a Forex trader. There are times you can open your chart and just looking at your chart, you know if the market is going to go up or down. And just looking at your chart, you know where to put your stop loss without second guessing. That comes with experience. That comes with you doing this over and over, and you can feel, that's what I'm saying, you can feel the market structure. That's very, very important. Let's talk about the cons or the disadvantages of trying to trade on your own without any assistance. Number one is fatigue, greed, and fear. Fatigue, greed, and fear, these are the most important. Fatigue, you can't do this 24/7. As a human, you have a limit on how you can go. You have a limit on the number of hours you can sit in front of your computer, or you can be on your phone looking for setups. So fatigue is the number one point here, because obviously you get a point in time where you get tired, but the robot doesn't get tired. That robot is going to operate 24/7 as if nothing has happened. So long as you have internet on your computer, the robot is going to keep running. And even if you don't have internet on your computer, let's just say your son or your daughter throws your computer inside the water, that robot will still working if you use what we call a VPS. So you put the robot in a VPS, and then all your settings are in that VPS, and now that computer is hosted in the cloud. Meaning even if that computer is on or not, on or having internet or not, that system is still operating 24. As we speak, I have trades running on BTC. This is Saturday, but I have trades running on BTC because I have a bot on that particular trade. I have trades running on Ethereum because I have a bot running on those particular trades. But I'm not doing it. I'm not seeing anything. I'm not getting fatigued because I've just left the robot to do that. So fatigue is number one. You can't do this 24/7. If you want to take your trading to the next level, you need to get to a level where you allow automation to do part of the work for you, to streamline and make work easier for you. Number 2 point, remember I mentioned fatigue. Greed. Greed is something I used to always tell you guys, you will never have enough in the Forex market. Greed is something that has killed many of you guys. So what's greed? Greed is just a situation where maybe you are able to catch a reversal in the market. Let's just say the market has been selling for maybe 1 week, 2 weeks, and boom, you see maybe your W pattern or your moving average cross or whatsoever tool you're using, your ICT fair value gap, smart money concept, and now you've confirmed a mighty reversal. You enter on that trade for maybe a risk to reward of 1:2. You're risking 2% of the account, or you're risking $2,000 to go for $4,000. The market goes up. Maybe you're risking 50 pips to go for 100 pips. The market goes up by 100 pips. Hit your take profit, and voila, you just made $4,000 on maybe your $200,000 account, or you've just made $2,000 on your $100,000 account. After that, you see the market. Let's just take something like gold. You see the market going up again for 600 pips. Now you sit on the sideline and you're like, damn it. If I was still on this trade, I would have, instead of $2,000, I would have been making $10,000 now. I would have been making $15,000. What the heck is this? You sit on the sideline and you start beating yourself up. That's great. That's called greed. That's one reason you're still not profitable. Because enough is just not enough for you. You feel like you're entitled to have all the profit. You will never hit the top when it comes to making profits in the Forex market. Go, number one, have your target. Once you hit your target, hit your chest and say, I did a good job, walk away. Even if the market has to move for the next 700 pips after that, that's not your concern. You had a good trade. You had a perfect trade. The same thing will happen if you had a loss. Sometimes you might enter a trade and there's something we call stop loss hunting, where the market just goes against you, trigger your stop loss, and then goes in your favor for the next 1,000 pips. You did a good job. Don't suffer from greed. Don't suffer from the fear of FOMO and then trying to revenge trade. Now I need to get it back. Now I just lost $1,000. I need to now use 2 lot size so that I can get my money back. At that time, everything is already messed up. You can't win. You can't revenge. No one in the Forex 10 years, I've never tried to revenge the market for once and succeed. No one, even if you succeed once, the next, and you make $1,000, the next time you try to revenge trade, you're going to lose $5,000. No one has ever succeeded trying to revenge the Forex market. So that's why I'm saying this is very, very key when you don't suffer from greed. And then fear. Fear comes in 2 formats. You have the fear of missing out and the fear of taking a trade. You have FOMO and FOTT. FOMO, the fear of missing out, when you see maybe you're watching a TikTok and someone say, oh, I just make $600 on NASDAQ. When that day was a bad day for you, you open TikTok, someone say, oh, I just made $10,000. I'm trading this currency pair and I'm going to buy. You say, oh, I'm not going to miss out. You run and go and buy without even doing any analysis, without doing anything. That's the fear of missing out. And you don't do like that in trading because you can't win. You didn't have any plan in place. You are just scared you're going to be missed out. All right? This system is still going to be here 10 years to come. It's still going to be here 20 years to come. Don't worry about missing a particular trade. You have another. By the time you're even crying about that particular setup you've missed, open your chart. There will be other 10 setups that you would have taken. There will be other 10 setups waiting for you to take. So you will never even take all the setups in the market. Never for once suffer from FOMO or the fear of taking a trade. So what's the fear of taking a trade? Fear of taking a trade comes in when you've seen that particular setup, you have a trading plan that you're following, and then all the boxes on that trading plan have been ticked. Have I got into my resistance level? Has the market produced my fair value gap if you are using your ICT? That means you have all the boxes ticked, and now is it a confirmation to buy or sell? If the answer is yes, then you see the person stands on the sideline and starts second guessing, or start getting, the person is scared. The person is having that fear within him to say, oh, what if this trade doesn't go my way? This is my $100,000 account. It means I'm going to be losing $1,000. Or I've just lost a trade. What if this one doesn't go my way? I'm going to be losing $2,000. Fear is something that will also keep you from winning. That's why you should always say, analyze like a pro and execute like a robot. Analyze like a pro and execute like a robot. When it comes to you analyzing your chart, take your time, bro. Take your time in the world to analyze. Make sure all the boxes are ticked. Make sure the market has gotten to your key zones. Make sure you exercise patience. A trade not taken is just another trade. It's just another good trade. All right, a trade not taken is just another good trade, in the sense that you need to wait for the market to play out according to your playbook, according to your trading plan, and then when you see that setup, boom, take it. You take it, you execute like a robot. Remember, a robot doesn't care. Analyze like a pro. Take your time to analyze, but when you see that setup, you execute like a robot. Because there's no one that can control the outcome of a trade. You don't know the outcome of that trade, if it's going to be a winner or not. But statistically, you know that even if it's a loser, with a series of 10 trades, I'm going to be able to maybe have 4 of them that are going to be winners, and at the end of the day, I'm still going to be making money. Another disadvantage trading as a human is just over trading, all right? Over trading, which I've already mentioned. You guys just don't know where to stop. You just don't know where and when to stop. You just keep going. You just keep going. You just keep going. Sometimes you want to take, you think maybe the more trades you take, the more money you're going to make. No, it instead becomes a diminishing effect when you take so many trades. That's why there was a point in time I made a decision, together with my wife, because she also trades, we decided that she was only going to take 2 trades per day, and that is it. Now you know you have only 2 bullets to shoot for that day, and you go for the best setups, and you know that, okay, that will also reduce the number of hours and exposure on the screen. That will also give you peace of mind. That will also tell you that, okay, now you have just 2 bullets to shoot, and you need to go for the best setup. So over trading is something that is killing you. You should have where to stop, and when you get to that level, close your computer and walk away. It's not the number of hours you spend looking at the chart, trying to make or trying to look for a setup that will determine. No, trading is what you just call working smart, not harder. The harder you work sometimes, the diminishing effect is instantly going to have on your performance. So have a target on the total number of trades you're going to take for that day. After that, even if you see 10 more setups, you are done for that day. Done over trade. And then another disadvantage when it comes to trading as a human is inconsistency. You are inconsistent. Maybe after a loser, you've already changed everything that was on your trading plan. You started doing your own thing. Maybe after you haven't seen you haven't taken a trade for maybe 2 days. You get into the market, you want to trade everything for that day. You get tired. You started suffering from over trading. So all of this is what is going to cause what we call inconsistent when it comes to trading. And then another disadvantage, trading as a human is just miss opportunities. You're going to miss some of the opportunities. You're not going to be watching your computer 24/7 because as a human, you get a point in time where you're going to be tired. So you're not going to be watching your computer 24/7. So you're going to obviously have missed opportunities. Let's go to the almighty robot. Remember, I'm a human and a robot at the same time. That's why you can see even on the thumbnail, the picture divides. There's part human, part robot. So Ndemazeah Godlove is part robot and part human, because I'm a pro in manual trading, and because of that, being a pro in manual trading, I've been able to code bots that are also pros in trading. So let's talk about robotic trading and the advantages of robotic trading. Number 1, no emotions. A robot doesn't care. That's why I told you guys at the beginning of the video that a monkey can be a better trader than you, because that monkey doesn't care about the money invested. That monkey doesn't give a damn about where you borrow that money to invest in that particular account, or where you borrow that money to invest in that particular channel. The monkey doesn't care. That's why the monkey is going to trade more than you. That's point number 1 on our list. On advantages on using Forex robot is no emotions. The robot doesn't care. It's going to trade. The robot only just follow the strategy behind the system. If it sees a buy, it's going to buy. If it sees a sell, it's going to sell. If it has to put a stop loss here, it's going to put a stop loss here. If it's going to take profit here, it's going to put a take profit here. Without any emotions, without caring about the money in the account. A robot doesn't go through fatigue, can trade 24 hours a day, 7 days a week, or 24 hours a day, 5 days a week, all right? I'm just saying 7 days a week because Friday and Saturdays and Sunday, BTC is still open, and as we speak, I have a trade in BTC up and running, which I'm going to show you guys the screenshot with my FTMO account, because you can actually trade it over the weekend. Another advantage of using a robot is just backtestable. All right, very, very simple, backtestable. You can be able to backtest a robot to be able to know the profit factor, the recovery factor, the drawdown. All of these, you can be able to get all of this data, which is going to tell you if that strategy is having a statistical edge with using a robot. I'm going to show you guys, we're going to go into a robot after this so that we can just do a back test for you guys to understand the power behind robotic trading. Sometimes you can see the recovery factor, you can see how much that robot made, you can see everything, all right? And then consistent execution. The robot is going to execute consistently without second guessing. Let's go now on some few disadvantages of using a Forex robot, because just as it has pros, it also has cons. Number 1 on using a Forex robot, it is faced during high impact news event, unless you have a news filter. That's why taking a Forex robot like Pitfalls Pro, it has a news filter. That robot is able to know when there's a news, and it will be able to reduce your risks, implement those filters that might preserve your account. So most robots fail during high impact news events because they don't have these news filters. Number 2 is rigidness. All right, rigidness. It doesn't adapt unless reprogrammed. So a robot is rigid. So long as you've already programmed something behind that robot, it's just going to be executing that particular rigid structure. It's just going to be executing that particular strategy, unless if something changed, you need to come and reprogram that robot. That's why, again, if we are taking something like Pitfalls Pro, you'll be able to hear version 1. Pitfalls Pro is around version 9 as we speak. Meaning it has gone through different revisions. We'll see that, okay, maybe we need to update the money parameters. We'll come and update the risk parameter. We need to add a news filter. We need to be able to add number of trades per signal. We need to be able to put a dashboard where you can see all signals that are being displayed. Then we go and do that. We have a team of 2 developers that are constantly and consistently working to make sure the board is up and running 24/7. So rigidness is another disadvantage of using a board, because if something changes on it, it doesn't adapt unless you reprogram that board. Then another tool is can blow accounts if coded badly. This is something I wouldn't even lie. A Forex robot, just as you can make $10,000 within a week using a Forex robot, you can blow it within 2 minutes using a Forex robot if coded badly. All right, if coded badly. Now let's go in a live example. Let me share with you guys a live example of a Forex robot, how it works, how important it is to be able to backtest that board, and how you can easily see statistics using a Forex robot. All right, so that we can also put it side by side with a human. So what we are seeing on my screen is actually a Forex robot. Let me just go up right here. And this board, I did a video yesterday where we spoke about this board. And just looking at this, it looks a little bit intimidating, but don't worry yourself. This is just statistics, all right? This is just statistics, and I'll explain everything you are seeing on your screen. So this backtesting was actually done within a period. Can you see the equity curve on this? Just looking at this equity curve, you can see how effective this board was, right? And just for the past, like this was from the 2nd of June to the 2nd of July, and this bot already made, go on backtesting, $11,000 net profit. About 11% of the account in just 1 month. 11% of the account in just 1 month. All right. And again, let's look at something in this particular bot. One thing we need to pay attention is how consistent the equity curve is. Look how consistent, even though we had a drop, but it always come out of that particular drop, and we had a very steady equity curve. This is a good steady. The only time the market dropped below $100,000 was $99,000, meaning it only dropped below $100,000, which was our starting capital, by $1,000. And at the end of the week, or at the end of those 2 weeks, we made $11,000 profit. Look at this. Let me just push this up so that you guys can see all the statistics on this account. That's our net profit. The recovery, look at the profit factor, 1.34. All right, so profit factor when it comes to a robot, just mention the ability of that robot to be able to make profit. Any profit factor above 0.5 is a very profitable robot. So that's why this one is even 1.4. Then recovery factor is the ability of that robot to come out from a drawdown. So a recovery factor is always advisable to be above 1. All right, above 1. Above 1, it means that robot is going to obviously come out from a drawdown if it's in a heavy drawdown. So in our case, it's even 2.4 recovery factor. And then you can see the total number of trades with 113 trades. Just tell you guys the importance of a robot. Will you be able to take this number of trades as a human? No, you're going to get tired at a point in time. The robot execute with precision, with consistency. That's why you can see we're just going for a risk to reward of 1:2, and we're risking $450 to go for $900. 0.4%, even 0.45% to go for 0.9%. And you can see loss here is $480 something, win is $900 something. It does that with precision. You can see all the data here. That's why they say it's backtestable. It's backtestable. You can backtest it over a period of with a particular set of data to see if that system is going to work or not. That's one big advantage with the robot. So still with this robot, if we go down, you can see it traded throughout all the sessions, Asian session, Europe and USA, and it made profit on all those sessions. This chart just shows you those sessions. That's just to tell you again, most of the time, taking myself as an example, the Asian session in South Africa is in the night. So most of the time I sleep throughout the Asian session. So while I'm sleeping, that bot is still making money. While I'm sleeping, that robot is still making me a lot of money. Look at entries by weekdays, Monday, Tuesday, Wednesday, Thursday, and Friday. This one was only trading strictly Forex, strictly weekdays, Saturday and Sunday, it wasn't operating. And then look at June, July. By month, we only tested it for June. It shows here July because it added the 1st of July, but it was only in June. We made all the $11,000 in June. You have profit and losses by hours. You can see our best trading hours is 3 o'clock, which is obviously during the New York session. That's why we make the highest amount of money. And then also at 12 o'clock and also by 4 a.m. This is in South Africa, or this is using the saver time. So that's still something you need to pay attention. Then profit and loss by weekdays, Thursday, our best days, and our worst days, Wednesdays and Mondays. And then profit and losses by months, obviously June is going to be number 1 month because, you know, we only traded it in June. So all the data is there. There's also what we call the correlation, because correlation, remember, correlation in economics, anytime you measure the biasness, the ability of a particular data set to be biased, you dot it, you put a particular dot to show how consistent it can be. So you can see this is our correlation curve, and anytime you see this green above this line, it means the strategy was very, very profitable with less rates below the line. That just stands for our correlation. So without going in depth, this is what they call optimization and backtesting a particular strategy or backtesting a particular robot. And only an EA will give you this particular opportunity. Only an EA is backtestable. So I just wanted to take that out of the way and also just show you guys this. So the board we are talking about here is Pitfalls Pro. I wanted to use Pitfalls Pro so that you guys can have an idea on how this board actually works. And the settings I use here for just the past 1 month, you can see I made $11,000 on my account. And even if you are doubting, you can see this was a trader in Discord. He got his first payout using Pitfalls Pro because he understood how the board works, and he understood how to fine-tune his strategy to find success with that particular board. So that is that with when it comes to backtesting a board, when it comes to you being able to, you know, find a balance. So big question that you need to be able to ask yourself: when to use Wish? All right, when to use Wish. So when to use a robot and when to trade as a human. That's very, very important. When to use a robot and when to trade. Let's start with when to use a robot, since I know we just left from talking about the robot. So when should you use a robot? You are trading multiple accounts. So you use a robot when you are trading multiple accounts. Like for me, sometimes I used to have maybe a Profim account that I'm trading with Funded Next. I have another one with FTMO. I have another one with IC Funded, Ting Market. So at that point in time, bro, you can't handle everything on your own. You need a bot to optimize. You need a bot to automate your system. So that's when a bot is going to come into play when you are trading multiple systems. Again, you use a bot when you need consistency. When you need consistency, when you need to execute without second guessing, when you need to execute without emotions, that's when you need a robot. And then also use a robot when you want to follow a tested strategy. You want to be able to know the recovery factor on that strategy, the profit factor, the drawdown, and all of that. When should you trade as a human? Point number 1, when you want to have full control. When you want to have full control over your trading, you don't want the robot to do anything you were not aware of, or you don't want to come and start asking yourself, oh, if I was there, I would have done this. So if you want to take full control, that's when you trade manually, so that you have yourself 100% to blame. Then if you want to trade around news or in choppy conditions, some of you guys like trading the news. You want to trade the strategy. You want to trade it. So if you are that kind of trader, then I wouldn't advise for you to use a robot. Trade on your own manually. That's why I have both manual trading strategies and robotic strategies. Another reason is if you want to rely on experience and intuition. So if you're someone like me with 10 years of experience, then you can still sit and decide that, okay, this account, I'm going to be trading only manually on this account, and this one, I'm going to be trading only with a robot on this particular account. So you trade manually if you want to rely on experience and intuition. So this is very, very important, and the best combo will come in if the smartest trader, let me just tell you, the smartest traders use both. The smartest traders I know, including myself, use both. Robots for automation and humans for oversight. All right, so this is a key word you need to know. The smartest traders I know use both. Robots for automation and humans for high side. So if you are someone like me, I will always advise, instead of spending your time ridiculing or talking about systems you don't understand. So no one ever make money from robots. The only people making money from robots are the people who create the robot, blah, blah, blah. Spend time to educate yourself. There are a lot of tools on the internet you can use to educate yourself on automation. There is no way a human can beat automation. You can't argue that, bro. There is no way a human can beat automation for many reasons I've just explained. So be a balanced person. For you to be profitable, you need to be a balanced person. You need to be someone who can still be able to excel with automation. What if tomorrow automation takes over and no one is able to make money again with manual trading? What's going to happen to you? You're going to be left out. So in 2025 and beyond, it's either you adapt or die. It's as simple as that. It's either you adapt or die. And being able to adapt, you need to go with what is working. You need to go with what is training, because what is working is being able to understand how algorithmic trading works, being able to blend algorithmic trading with your trading arsenal, and also being able to trade and make money manually as an individual. Like I said, a fool can't create a Forex robot. You need to first of all be profitable on your own before you can code that strategy you're profitable with behind a particular bot. There are many websites you can go and hire developers that can code your strategy. You can go to mq5.com. You'll be able to pay a developer there that knows how to code but doesn't know how to trade. You know how to trade but you don't know how to code. So you go there, pay them. They will be able to code your bot for you. But the first thing is you need to first of all have that strategy which is working. Let me know in the comment section if you are team robot or team human. All right, let me know. Just comment if you are team robot or team human, or you are team both like me. For me, I'm team both. I can excel in both with my 10 years of experience. I have bot upon bot. The ones you guys have never seen of bot upon bot, the only one you guys know is Pitfalls Pro. So let me know if you are team human, team robot, or team both on the comment section, and I promise I'll reply to every comment. And talking about robot, trust me, one robot has won award of the most profitable Forex robot 3 years in a row is Pitfalls Pro. That's the best Forex robot period that you'll be able to use on your private account or use on your prop firm accounts. All the testimonials you are seeing on the screen here, these are all traders who are using the robot to pass their prop firm accounts, to get their first withdrawals. And the only robot that comes with a Discord community where you can actually see what other traders are saying in that Discord community. So check the link on the video description to get Pitfalls Pro. You can even get a monthly license just to test it out for yourself. And then when you make a lot of money, you can then go for the yearly license. But that's something you need to be able to incorporate in your arsenal of trading. Check the videos that are going to be coming on, or check this particular video, which was a detailed review I made on Pitfalls Pro. Also check this video, which is a robotic related video. Click here to subscribe to the channel if you haven't done so. And I'll see you guys on these other videos.